Okie dokie.
We.
You gonna intro or should I?
Hey, you intro this time, mate.
Alright. Welcome everyone. So obviously this is our usual Friday stream slot, but we decided to do something a bit more along the lines of the psychology side, and like we said in that announcement, we've seen a few people struggling, especially on the crypto side, who aren't also in the pilots. So, there's probably a lot more who are suffering from this kind of thing. So, we just want to try and help you out. So that's why we've done it in the free group today, so we can just try and reach as many people as possible. We're putting this out on YouTube if we can. And yeah, we're just going to go through what I've called the Spitfire way. Me and Spitty have just had a quick bit of dialogue between us to talk about this kind of thing. Yeah, Spitfire therapy session. We just had a quick bit of dialogue about this, but we've spoken about it at length. So we're kind of going to riff off a little bit about it, maybe take some questions, but we are going to stick to some real key themes. And I've built a little bit of a diagram about it, which isn't fully finished because I've been really busy this morning, so we'll expand on it as we go. But yeah, this is what works for us. This is the Spitfire way, right? So, day trading versus swing trading. Okay, so Spitty, do you want to cover why do we day trade TradeFi and why do we not day trade crypto?
Yeah, yeah. It's a lot of guys, especially if you're not in the group, especially more recently, I've kind of taken a step back from crypto. I've not been putting out much free content on YouTube. Purely because crypto, in my opinion, has lost its shine, in a sense. And I think I can say this, and I think I can see this with a lot of people's thoughts and the psychology that's coming out, which has kind of also prompted this stream. Crypto's lost its volatility, in short. The movements are typically happening during Asia. New York's not really got any crazy volatility. And from a day trading perspective, it's not really worth it anymore. With my own trading, I've personally moved over to TradeFi a lot more, so I'm doing a lot more on NQ, ES, and Gold. Because these markets are the biggest markets in the world. And they move. And the beauty of these markets is you can come into them, trade 15 minutes worth of price action, and you can be done for the day, which then gives you the time. With crypto, for me now, personally, it's better for swing trading because it's something that I want to set and forget. So I want to know where I want to do business. I want to know what I want to see to do said business. But I want it on a high time frame. And then once I'm in that trade, set my stop loss, set my take profits, and I just want to walk away because I don't want to think about it. Because the lack of volatility, it takes a hell of a long time these days to move. So I can put that onto one side, and then I can just get my bread and butter now from day trading, something that's got volatility, and identify a really strong statistical edge. Now, there's many theories, and again, I don't want to put my tinfoil hat on. My personal take on the crypto industry is this cycle has been a shit show. And it's because most of the liquidity has dried up thanks to the meme coin casino and all that bollocks that came along with it. We're not really seeing much new money coming into the market, and the new money that is coming into the market are coming via ETFs and I'm going to say the word institutions very loosely, but like MicroStrategy, for example. We've got a lot of big boys playing a fairly illiquid asset, and then you've got dilution across hundreds of exchanges now and decentralized exchanges. It's just lost its fun. It's lost its fun. Last cycle was fun. Yeah, we had the NFTs that ran alongside it. It's okay. Complete waste of space in my opinion. That's irrelevant. But it ran alongside the crypto market. The meme coin casino took over the crypto market and got everyone's attention. You can make 10 grand in 3 minutes, with a $200 account. and it basically swayed everyone's attention. So for me personally, that's why I think now day trading crypto is just not worth it. So,
well, in the same regard, like the swing trading element of crypto is great. Like it gives you that time back, and that's a really, really important thing with trading. And I've mentioned this before. It's like trading's really quite rare in this regard, as you're not paid for the time that you work. You're not paid for the time you put in. You're paid for your decision making. Okay, and the more time you put into the market, the more likely you are to make a bad decision. And bad decisions lead to loss of income. Again, that's rare to this kind of work. It's not like any other job. You just sit there and you knock down the hours, you get paid for it, and you never get money taken away. But in trading, money can be taken away from you if you are there for too long and you make bad decisions. So it's a really, really unique thing where I suppose it's like the Pareto principle. It's like 80% of the results will probably come from 20% of the time. Okay, so when you spend every single day staring at charts for hours and hours and hours and hours, you're just harming that ability to make good decisions. Okay, and you're exposing yourself to more bad decisions. All right, so you need to get yourself away from the charts. But when it is time to trade and you do want to do some day trading, pick an asset that is going to give you a higher risk to reward and more efficiency for your time. I suppose, like in a small space of time on the NQ, within 30 minutes you can make so much money, and you can capture such an incredible move that you just don't see on crypto anymore. And then meanwhile, you can wait for those swing positions and those AOIs to start playing out. Okay, so with that, how would we define a day trade versus a swing trade? And in my personal opinion, I have quite I suppose a mechanical way of looking at this. It's that the way I trade is I tend to what I call use candle framing. Okay, so I tend to use the candle structure and basically just predict or use technical aspects with probability that I believe price will go to the high or the low of that high time frame candle. Okay, and that high time frame candle could be the 15-minute or it could be the monthly. Okay, so for me, I define a swing trade as a high time frame candle beyond the 4 hour, so at least a daily, because I expect that trade to take at least a day to play out. So it's going to cross that 24-hour threshold. It's going to enter into the next day. And for me, a day trade is simply a trade I expect to play out on that day. Okay? So I hope I haven't lost anyone there, but it's very, very simple logic. A day trade is a trade you expect to play out that day. Okay? A swing trade is a trade you expect to maybe take more than a day. All right? So that is the essence of a day trade versus a swing trade. And the way I approach swing trading in crypto is I use daily swing formations, I use daily biases, I use weeklies, monthlies. Like my Bitcoin trade that I'm in right now, I'm currently framing a higher time frame candle as the monthly, so I'm looking for a monthly bias to play out. But I would never ever do that on a day trade. I'd be framing a 4-hour candle, a 1-hour candle. I'd be looking for price or the trade to play out over the course of an hour to 4 hours. Okay, so that is a really, really simple way of splitting the two off, and you're going to get much more opportunity on TradeFi during the day to make your money and get that itch that obviously a lot of traders have. But when you separate crypto into the swing trading side, it then gives you that freedom of time to live your life, do something else, work your day job, be with your family, have a hobby, exercise, shit like that. That's gonna make you a better trader, because when all you do is trade and all you do is obsess about trading, it's gonna make you a worse trader. That is the reality of this thing.
Yeah, I want to caveat this whole thing that this isn't a stream that's trying to convert people crypto into TradeFi or anything like that.
No.
This is based on, I've had so many conversations now with students and people in the free group and on Twitter that people are getting bored They're losing their mind. There's no fun anymore trading crypto. And that's because the volatility has dried up. That's all it is. There's no different. You know, the price is still reacting from main key levels. It's just not really moving like it used to. And again, that could be because, you know, we're nearing the end of a cycle. We could be midway through a cycle. Who fucking knows? Okay, it's just, if you are getting that boredom, that frustration, you're entering a trade, you're expecting it to move, you're then putting your stops into profits, and then you just get tagged at break even, and then eventually over the next 3 or 4 hours it finally gets to the target that you were looking at. The frustration that I'm seeing day in, day out. And it's why there's so many people, I know so many fucking people in this space that have walked away for that very reason. And yet they're good traders. But they're just bored. And they're frustrated.
Yeah, the frustration is a big one. It's like that, you know, putting in the effort and not actually seeing results, like, it is a very difficult thing to overcome. And we've had discussions about this before, Spit, is like, if we were to direct somebody who's brand new to trading towards day trading or swing trading, like, we would direct people towards scalping and day trading and higher frequency trading. Why is that? It's because you get the repetitions, okay? To get the reps in a short spell of time, all you're doing is looking to build that experience, that screen time, that is going to enable you to have that, you know, that experience to act when the time is right, or to not act when the time is wrong, okay? But if you're swing trading, you're taking very few trades, then, especially for a learner, that can actually hamper your progress and slow it down, okay?
Yeah, I love this conversation because I was completely against Cake on this at first. Bear in mind, I've been trading for a long fucking time now. And I've never had a problem with swing trading. But when you actually do the maths, and especially in the early phases of your trading career, high time frame trading is arguably easier, as long as you've got the mental to be able to hold the position overnight, yada yada yada, and all that stuff that comes with it. But you're never going to get the quick feedback. You're never going to get the quick wins or the quick losses, which that's what you need in your journal to build up your stats. And if you don't have your stats, if your system is working or not, or when your system slowly stops working. With any strategy, no matter what market you trade, eventually your strategy will go from, if it's a winner to start with, eventually your strategy will start to die off because markets change. And if you are trading macro and swing trading, it's going to take a lot longer before you get that feedback that that strategy doesn't have an edge anymore. So that's why lower time frame trading is arguably much better, because you're getting that quick feedback. You can get through 100 trades in a lot quicker time. If you're swing trading, you might only take one trade a week. Well, it might take you a year before you realise that it don't fucking work.
And I think that segues quite well onto what we want to go in next. Like, by no means are we suggesting go and do 1 million trades today and absolutely trade your bollocks off. That's the very opposite of what we're suggesting. What we actually really want to suggest today, and we want to give you some actionable sort of advice that you can take away today and start utilizing. And it's stupidly simple. It's the very principle that me and Spitty have been applying to our New York live streams. And if you've seen the results that we're putting in on those live streams, you'll see the consistency that we have. You know, when we do have a loss, and obviously losses come along, they're very small. They're never more than a few R. I think our biggest losing day was -3 or 4 R. But our biggest day has been like 19 R. So the principle that we're going to suggest today, and one that we really want to stick on with you guys, and you know, take our advice for what it's worth to you, but you know, this stuff for us works, okay? So what we're going to suggest today is you utilize this risk/psychology framework, and it's stupidly simple. 3 trades per day max. That's it. Okay, no ifs, no buts, no maybes. That's it. Okay, if you're struggling with your psychology, you're struggling to make progress as a trader, you're probably doing one of two things wrong. Okay, maybe even both of them wrong. But if you exercise this 3 trades per day max as a hard rule, it will help you develop, and it will help you understand where you need help or where you need to develop. Okay, so of those two things, we really put it down to one or two things. So if you're utilizing 3 trades per day, the only logical reason for if you're blowing accounts using a 3 trade per day rule is either you've got too much size on, or you have system failure. Okay, so I'm going to start on the too much size thing, right? And I was speaking to one of the guys earlier in a one-to-one session, and I was explaining this element of size, right? So if you are trading in a prop firm, right, which I know a lot of you guys are, this is the way that you can operate with good sizing. Okay, so with a prop firm, just use this very simple equation: max drawdown divided by max consecutive losses. Okay, and see this as a scale. So if you're a beginner, you're looking for around 10. So what does that mean? It means that if you lose 10 trades in a row, you will hit your max drawdown and you'll lose the account. Okay, so you simply just divide the max drawdown by the max consecutive losses. So if you've got $2,000 max drawdown and you want to start out with 10 consecutive losses, your risk per trade is now $200. Okay, and that's a very, very simple way of being able to risk appropriately and size appropriately. Okay, so many people in this space conflate the idea of leverage with position size, when in reality you could trade with 150x and I could trade with 1x, but we'd have the same risk if our position size was the same. And so many people don't understand that, and that's just the symptom of the idiocracy that we live in with crypto Twitter. But as you get more advanced and your system becomes more reliable, okay, that is when you start to move along the scale. Okay, and when you move to advanced, that is when you start to take 2 to 3 consecutive losses, right? So if my max drawdown is now 2,000, right, and I want to take 2 consecutive losses before I lose the account, then I'm risking 1k per trade. That's it. So as your confidence and as your system grows, you move up the scale. If you're starting to see issues and you're starting to lose more accounts and not reach funded, not reach payout, you start to bring it back, okay? And you just constantly move along this continuum, okay? That is the simplest method that you could ever use for prop firms, and it's been very, very beneficial for me, okay? Still use the 3 trade max per day rule, okay? And utilize the exact same principle with swing trading, okay? So with a risk scale, for me personally, I would say that on the lower end, you're looking at around 0.5 to 1% of your entire account per trade. If you are super advanced, you have a really, really advanced, you're at a really advanced stage, you've got a lot of confidence in some setups, you could even go as aggressive as 5%, and I do sometimes. Okay, but never more than 3 a day. Okay, because even if you lost 3 trades in that day of 5%, it is a big loss, 15%, but it's not catastrophic. You can pull it back. Okay, so that's just a really, really simple way of looking at risk. Okay, so what the other is, sorry, go on.
Sorry, okay, it's just this doesn't just apply to prop firms. I just want to make that really clear.
No.
Setting a rule, a hard rule of 3 trades a day max, is one of the best things you will ever do. If I've said this before on there's one of our psychology live streams within the membership, and I think I got this from Trader Dante years ago. And if you don't know who he is, go follow him. He's great. But if I stuck a gun to your head and say you can only take 3 trades today that you know have a very high probability of playing out, and if you take a 4th trade, I will fucking shoot you. You're going to be very selective over those 3 trades. And this is the rules that you need to set yourself. You don't have to be as extreme as that, but trading is all about discipline. This is where you slip. You might take those 3 trades and you might get 3 losses. Where you're going to slip then at that point is you're going to take a 4th trade because you're going to try claw that back. You're going to take a 5th trade and you're going to try claw that back. Then you're going to start oversizing because you're on a losing streak. And before you know it, you've blown an account, or you've blown, your prop account or your personal account or whatever it is. But if you set yourself a rule trades, that's a massive step in the right direction. That's a step towards sustainability, consistency.
The thing with consistency as well, I really love this redefinition. I said this a while ago, but consistency isn't winning every day. A lot of people say, I need to make $100 a day in order to be consistent. I need to make 150, I need to make 200, blah, 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 whatever the number is. That is what I need to do to be consistent. And a lot of people will say, I just need to be more consistent. But what they're actually conflating with consistency is a winning streak, okay? Real, true consistency is turning up and following your rules and your plan and executing your system when it's there, no matter what the result is. Okay, so true consistency is turning up and doing the same thing again and again, whether you win or lose. That is true consistency. What if my rules are to blow my account?
Oh, you start. Someone ban him.
Nah,
Kick him out.
Could never ban Jeffy. I love him too much. You lanky bastard, Jeffy. Do you recommend to up the risk on evals or treat like a funded? Right, so this is where the scale comes in, okay? So when you're starting out in evaluation stage, you're a beginner, okay? You just got into utilizing a system, you just started learning it, backtesting it, you're starting to operate in a live market with that system. You're going to be taking 10 consecutive losses, right? As you become more proficient, maybe you pass maybe you pass an evaluation account, you get to the funded stage, right? You've proven that system actually works. You can start moving down this scale, okay? And when you get to an advanced stage, right, you now have to consider the opportunity risk, I suppose, because if you're trading at an advanced level and you're still taking a very, very low risk at the evaluation stage, those trades that you're taking could have been done at the funded stage and actually put money in your pocket. So by spending too much time in the evaluation stage, you're actually harming your progress and you're actually not making any money, okay? What you're also doing is you put in that funded account on a pedestal, and you're putting that evaluation account on a pedestal and you're putting too much sort of associated value to it, okay? So like I've said in the past, and Spitty agrees with this, is like when you reach that stage of being advanced, you want to spend as little time in the funded in the combine, the evaluation stage, as you possibly can, because it doesn't really serve you trading paper money anymore, okay? And if you can spend time trading in the funded stage, you can start to break over the next hurdle with prop firm trading, which is the psychological element of, right, this is now a funded account and this is real. This is the big leagues. I need to actually start making money now. This is where the risk is on. And a lot of people struggle with that. Like, I answered a question on this yesterday. It's like, how can you overcome that hurdle? It's the exact same as how to become a better trader. You need exposure. You need to get the repetitions in. You need to take more trades in a funded account to be able to be used to trading in that environment, okay? So by spending too much time in the evaluation stage, you're actually harming progress at that point, okay? That's why we need to operate within this range, okay? Any other questions on this? Right, as I just arrived, I don't know if those questions are already answered. How do I get out of the spiraling of tilt? How to accept losses, how to accept losing perfectly sane trades, how to approach mentally the trading after losses / consecutive. Simple answer, and this is why we really want to push this 3 trades per day max rule, because if you've just got one rule overall for the whole day of 3 trades, how can you possibly tilt with 3 trades? Maybe you size up too much. Well, that's problem 1. That's what you need to fix. Okay, so this is an actual actionable framework in order for you to operate that avoids those things. If you tilt after one trade, you probably sized up too much. You know, maybe the market's tried to humble you a little bit. Things like that. Let's say you get a stop break even and then it goes to your target. Sometimes you've just got to take a hit in the dick and you've got to be like, all right, okay. Like me yesterday during stream, everyone was taking the piss out of me. I didn't tilt. I just accepted my L. I just went, right, I'm just going to take a $100 loss. It's nothing. It's the end of the month. It's FOMC, week. I'll just take it. And, I was shooting for a little bit of a Hail Mary with that weekly opening gap on NQ. But, sometimes you just got to hold your hands up and just try and be humble, okay? And
it fucking went there.
Yeah. It didn't. It hasn't gone yet. It hasn't gone yet. So sometimes you've just got to have that experience to just be like, right, okay, I'll take it in the dick. All right. But also understanding what are your emotional triggers. Okay. So for me personally, I would rather take one single bigger loss than 3 smaller losses or 2 break evens. You know what I mean? So like sometimes you've just got to understand who you are as a trader and how you react to certain things that will happen during the trading day, and you will only discover that stuff by being introspective and keeping a journal. Okay, so there are things that you can do, but the big thing about tilt, and what I think tilt is mostly linked to, is like emotional burnout. Okay, so if you're spending too much time at the charts, you're spending day after day after day after day after day, you're more susceptible to tilt. Okay, so when you're fresher and you're relaxed, you've got things going on in your normal life, you just get to the charts, you look at things quite objectively, there's not too much going on in your head, that's when you're gonna get the best. That's where you've got more in that emotional gas tank, or more in that sort of mental capital. Okay, so just being more objective and being the observer of yourself is going to allow you to pull yourself away from certain situations. Okay, and that's a difficult thing to achieve, but it is doable. Okay, it just takes a little bit of time, and you're not going to help yourself if you're taking 20 trades a day and you're risking half your account every time you do it. Okay, so that's why we come back to this very simple framework: 3 trades per day, use sensible risk size, and just if those three trades end in a loss that day, just fucking take it like a man. Okay, or a woman, whatever happens, you followed your rule that day, and if you lost, you still displaying signs of consistency.
I think someone made a comment I was reading earlier about if you are tilted within those 3 trades, then chances are it's something to do with attachment to money rather than attachment to the setup.
Yeah.
Which again,
that comes down to where are you on this scale. If you're right down here and your risk is, you've got 10 consecutive trades before a loss, this value of money shouldn't really affect you. Especially if you're using a prop firm, because if you've got a 50k account on a prop firm, it's not actually $50,000, it's $50. So if you're taking a $500 loss, it's more like 50p or $5 or whatever. It's a very, very small amount of money, so just don't let the numbers talk. Just simply utilize a very simple risk framework, okay? And if you are blowing an account with 10 consecutive losses, then guess what? Problem 2. System failure, right? None of the systems that we teach in Spitfire should have a 10 consecutive loss streak. It just simply shouldn't happen. Okay? Because we have probabilities, we have data, we have anecdotal evidence that completely and utterly verifies that that shouldn't happen. Okay?
I like that. I like that you just put there about each loss is 50p or whatever it is.
Yeah.
It's just a really clever way of thinking about it. I've never put two and two together like that, but it's a really good way to think about it when you're trading prop firms.
Yeah. Like a 100k account is $100 with Top Step. So if you risk $1,000, it's essentially, what, a tenner?
Yeah. I'm putting it in this perspective, like MCF, for example. Like, so let's be honest, we've always got a discount going on with those. So, like, even with a standard discount that we get, I'm just working it out this way. So you divide that by 10 trades. So yeah, even blowing money on a 100k MCF account, which arguably it gives you access to more funds compared to a futures prop firm. Each loss is $59. So if you compare that to if you're trading your own account, you know, if you've got your own 100k account, each loss is a hell of a lot more than $59.
Yes, sir. You broke the rules, Meso.
Yeah, that's all that is.
Plus, prop firms are cunts. They do not want you to win. That is how they make money, okay? That's why we love Top Step so much, because they actually give you tools to prevent you losing money, okay? Like, no other prop firm does that. That's why we love them.
But the thing is, I'm not gonna badmouth MCF because I've never had an issue with them. As long as you stick to the rules, you're gonna get pitted. But you got to think of it, that's how prop firms make money. They need you to lose in order for them to turn a profit. So therefore, if they can get you on something where you've broken the rules, even just slightly by accident, they will get you on it. Any prop firm will. So stick to the rules, get your money, and run away. Do that with any prop firm.
Yep.
Is the MCF discount still on? Yeah, it is, mate.
It is only Tard Fight, yeah. I think actually, no, you can trade Bitcoin on it. You can.
You can trade CME, can't
Yeah.
you?
Why would you day trade Bitcoin? Have you not been listening?
Exactly. The whole start of the stream rant.
You get a 50% consistency rule in the evaluation stage, but absolutely nothing in the funded stage. So you could make 99% of your payout in one day, and the rest of the money and the rest of the 4 days required to get it.
So for 100k funded.
I was going to say, Top Step v MCF, what are you looking to trade? If you want to trade day trading futures, Top Step. If you want to swing trade some crypto, MCF.
Although I do trade NQ via MCF.
That's just because they give you loads of accounts, you prick.
I just like it. So I don't have to worry about contract sizing. And I can partial skim. Unlike you fuckers.
I taught you contract sizing in 2 minutes and you went, oh, I get it now. Well, it's not hard. Come on. Yeah, Top Step v MCF. Top Step very, very, very rarely reject a payout. They are very good payers. They pay very quickly, and the rules are extremely simple, and there's no consistency rules. You can make 10 grand in 1 day, and you can make 150 for 4 more days, and you could take 5 grand out. Like, they are brilliant.
the thing is, I think for me the big difference between, like, for example, Top Step and any other prop firm account pretty much is Top Step you can set your rules. You can actually put your rules on their system, so you can give yourself that free trade max rule. You can set yourself a max drawdown rule, max profit rule. You can set those so the system will literally lock down. Once you've had your third trade, the system will shut down. And that's why they are different to most other people. And I don't trade on that myself. But anywhere else, any other platform you trade on, you've got to stick to those rules yourself. And being truthful, that's where people fall down. It's not really to do with the system. It's to do with you controlling your own rules. You controlling yourself. Because there's nobody to shout at you when it comes to this game. There's nobody there to tell you that you've done shit. It's just yourself. It's very easy to break your own rules and then think, yeah, it'll be alright. Nobody will know. Fine. And then you just get pissed off with yourself when you blow an account. So that's the big difference between the platforms.
Yeah. Just answer a couple of questions. Marty, I used FTMO a long time ago, and I found them to be overpriced, and the phases took too long. It might be different these days, but maybe check out Tradeify. I really like Tradeify. I've had a couple of payouts from them. I've always been happy with their service. The consistency rules are a little bit annoying. Only so much as if you're in a really great trade, having to close a profitable trade because you're going to make too much money just sucks. And I just don't like that. That really does my head in. But what else have we got? Yeah, so Tradeify Max, with Tradeivate, you can set a daily loss limit or daily profit limit, but you can't set a max trade limit.
Maestro, how do I detach from the fantasy of making it all now? Meme coins made me a greedy fuck. Well, my question back at that is, are you rich from trading meme coins? Because if you are, why the fuck are you still trading? So that's the truth. That's the hard truth. You know, everyone loves the casino. Have you ever got rich from the casino? And did you keep that money? No. That's why you're here. That is why you're here. Still trading. Everyone comes into trading thinking that you're going to get rich. That you're going to, within your first few weeks, you're going to hit that 1 in a million trade and you're going to make it all. You're not. And if you do, if you are, like that, is it Dogecoin Millionaire or whatever he was? I can't remember what it was called. One of the fucking guys that were early on Doge. They just give it all back. They always do. I did a tweet yesterday, you know, about price action that goes up in a vertical line. Everyone gets really excited. And as soon as it turns, it comes back down in a vertical line because it builds no structure. That's exactly the same thing with your trading account balance. If you somehow hit that 1 in a million trade and you 1000x your money, which the odds are very, very slim, chances are you give it all back because greed's going to take over, and you give it all back just as fast as you made it. And then before you know it, you're back to square one again. Because slow and consistent is the way to make money in this game.
Hello. Enzo's just shared how you can set risk parameters on Rhythmic, which is pretty cool. But the only issue with that is you have to trade on Rhythmic, which fucking sucks. I've lost 3, I think it was, 250k accounts, funded accounts on Apex because of a Rhythmic outage. And that was about a year and a bit ago. Yeah, that fucking hurt. Rhythmic's just your data provider. Yeah, I was trading on I had a Rhythmic account, but I was trading on Quant Tower.
Tower. I've not seen that for years.
Yeah.
Is it still a thing?
I think so, yeah. Might be worth looking into for some order flow stuff.
Yeah, I'm sure they used to be dead expensive.
No, you just buy a prop firm and then you get the data as with that, and you can pay a little bit extra for level 2 data. Might be worth us looking at, actually.
It's not expensive anymore. 1,600 quid for lifetime license.
Max, so for 100k funded account, would you typically risk 500? Yes. So with the challenge stream account, whatever you want to call it, the top step accounts that I've been trading only on streams, in the evaluation stage, I risked 500. Okay, I got that to pass, and then I entered into the XFA stage. I then risked 500 until I went into drawdown, and my drawdown and my max loss limit were a little bit too close for comfort. So what I did is I reduced risk at that point, made some money back, and then I increased my risk back to 500. At that point, I then continued with 500 until I reached the stage where I could take a payout. Once we took the payout, I'm now in a stage where my drawdown is only my balance. So I need to be a little bit more careful with risk. But in general, with a 100k account, I utilize a 0.5% risk. You should move that scale where appropriate. So if you enter drawdown or if you are close to your loss limit, okay, just to give yourself more of a cushion of more consecutive losses. Okay, in general, I like to be around 4 or 5. I like to be around the middle ground on a funded account.
Right. Do you have any more things to go through on this slide, Cake, or shall we continue with the questions?
Right. I was going to try and build this section out a little bit more, but just to go back to this, so really, really simple. If you've got 3 trades per day as your max rule, right? If you blow accounts using the 3 trade per day rule, you either got one of 2 problems, right? You either risk it too much, which we've just covered in length, or you have system failure, okay? So in terms of system failure, this is a little bit more of a complex idea. So one of the first questions I would ask someone if they told me they were a trader is, can they define their strategy on a single page? Like, can they write out what is their setup? Okay, what is a setup that they would take? What is their model? Okay, and everyone listening now, just ask yourself that question. Can you write out and define in very short, simple terms exactly what your setup is? What is your strategy? How you define, one, a bias, okay? Where do you believe price is going? Why? Your confirmation or your AOI. Where do you want to see price go? Okay? When are you interested in trading? Entry protocol. Okay? What do you need to see happen in order for you to enter that trade? Where is that invalidation? Okay, where are you wrong? Right? Once you have those 3 factors, and obviously the 4th of invalidation comes into entry, it should be just as simple as you have that confirmation, you have your entry protocol, you trade to bias. Okay? That is the very essence of a trading plan and a trading strategy. If you can't define each one of those points, you have system failure. Okay? If you can define each of those points and you are still blowing accounts and you are risking the right amount, then guess what? You've still got system failure. You need to learn something else. You need to develop your understanding of how to view the market. And guess what? That's where we come in. Okay? We give people high probability strategies. We then demonstrate those strategies live. Okay? It's as simple as that. If you want to learn how to trade and trade consistency, Spitfire Traders, we've got fucking how many hours of educational content?
A like saying it because it's too many. There's well over 250 modules, put it that way.
Spitty is a fucking trading encyclopedia. He knows Elliott wave, order flow, patterns, fucking everything. Except the shit I taught him.
Yeah, but that's also a good point, though, isn't it? It's the fact that, you came in completely different style. And this is the reason why I wanted you in. Completely different style. And I got to learn again. And I've implemented some of your stuff.
Yeah.
And it's given me an improved edge. It's always continual learning. Always continual learning. Absolutely. I've done this for fucking years. I'm over 10 years now in this game. You've always got to adjust. You've always got to learn. Because if you don't, you fall behind. And again, fundamentally, how do you know when you're going to fall behind? Going back to cake system failure there. You will not know, outside of blowing accounts, you don't know where you're going wrong unless you're journaling every fucking trade you take. You've got to do the boring shit. If you can't do the boring shit, you are not going to do very well in this game. It's a business at the end of the day. Keep your books up to date. Right, do we have any more questions?
Not a question, but I just want to say, Enzo, stop being a smart ass in the fucking chat. Cunt. Maestro wants to know if you trade ICT.
Fucking hell. Mr. I can't trade. Jesus, come on. Right, I'm just scrolling up to see if there's anything else that we've missed, any other questions. If you've put a question in chat and we've not answered, post it now. Don't want to turn this stream into a stream about which prop firm's best.
Yeah. It doesn't even matter. 2 weeks to pass the eval is good. Yeah. Considering you've got 4 weeks to do it, you did it in half the time. It's impressive. Another thing to consider with prop firms is like when you get to those final couple of days, okay, when you're getting towards that rebuild, and if you haven't passed the prop firm within 4 weeks, you may be still in this stage. But if you're not in that stage and you're still getting towards the end of the rebuild cycle, because obviously they're monthly subscriptions, if you're getting towards the end and you still haven't passed it, book it all and just go up risk, okay? Because you're going to pay for the new account anyway, so you may as well go all in, shoot for it, you know what I mean? It's better to just pay the funded fee than having to pay another subscription and then pass it later. Because you've just got to consider how much are you putting into prop firms, okay? And another thing that we haven't really covered that I think is actually quite important is if you are starting out in trading, give yourself like an allowance or an investment in yourself, okay? So let's say, you earn, a few grand a month, whatever, but you say, I'm going to give myself a $200 investment in my education, or let's say a $300 investment in your education. You pay $100 to that in order for you to learn, and you put another $200 of that into evaluation accounts, okay? That is your fund in order to learn, okay? Utilize that money and be tracking that money, because if you go and spank $2,000 on accounts and you get a payout for $1,000, you're still down. So you need to keep an eye on what you're spending, okay? This is a business. Don't spend too much on accounts, because when you do eventually start getting payouts, it just means that you've got a bigger hole to climb out of, okay? So be sensible. Just be sensible.
What do you just suggest approaching the courses on WAP? This comes down to what methods you want to trade and what markets you want to trade. If you want to trade a very mechanical system, stick to cakes side of things and just go through cake stuff. If you want a more confluence approach, which is can be a little bit more subjective, my way of trading, it's not for everyone. then go with mine. My TradeFi stuff is very mechanical, but my crypto stuff is a little bit more fluid. So it depends what style you want to go down, what style suits you best. You know, I've had people that have been learning from me for years. I'm not going to drop names, that have never really grasped my way of trading. It's not worked. And then as soon as we brought Cake on board, I've quickly pushed those guys over to Cake, because if you can't trade my style, then chances are you are going to get on board more with Cake style because it's more mechanical. But again, if you've been trading Cake style, a more mechanical way, and it doesn't suit you, then try my style.
By the way, probably... Sorry, go on, mate.
I was going to say, everything on the WAP, depending on whose route you go down, is all in a logical order. Cake's got his cookbook, which is in a logical order from beginning to advanced, and mine is in a logical order from beginners to advanced.
And yeah, you could use a nice marry of both styles. Like, you'll see, like, Evelyn, for instance, she uses a lot of what Spitty teaches. She'll often be thinking exactly what Spitty's thinking, but she's also incorporated some of the stuff that I teach. You know,
a lot more entry criteria.
Yeah, Kane and Rouge, like, probably a lot of you here know who they are. They're both students of Spitty. Like, Kane's never seen any of my educational content, I don't think. Rouge has seen a little bit of it, but, you know, one method isn't...
Rouge is a mixture. Rouge is a mixture of both.
But there's no one method is better, okay? There is no single way to trade. It's just find the way that allows you to look at the market in a way that makes sense, and for you to make actionable steps toward edge, okay? That's all you need to do.
Look, you can make money in this game. You can create a system in this game based on anything. You know, there's the whole fucking meme of the moon cycles and things like that. Don't let any dickhead tell you that their way of trading is the only way of trading, because it's not true. It's just all about repetition and making sure you've got the statistics, the journal entries to say, does this way of trading work? Yes. Cool. Stick to it. Don't give a shit what anyone else thinks. If it works for you, stick with it. Don't look at anyone else while you're doing that. If yours is working, don't pay attention to anyone else. It's very easy in this game to get distracted. If you've got a really good system that offers you one trade a day and you're profitable, and then you compare yourself to someone that's scalping and might be taking 50 trades a day, and you're like, oh, they're posting loads more P&L. Ignore it, because that might not work for you. Stick with what works for you. Does Confluence trading work in legacy markets with Elliott Wave logic? Yes. Where can I find RK and Bob? They're in the strategies modules.
Yep.
But Confluence trading is more likely swing trading, right? No. All Confluence is, and again, people have taken this out of context. Confluence trading, we all technically use Confluence trading. Cake uses Confluence. I use Confluence. It's all about the different tools that you're using to get said Confluence. All Confluence means is I've got 2 or more types of TA that line up in one area that says that's a good area. And all it means is because I'm covering, so if I use Confluence, if I use volume profile, for example, and fibs. So if I've got a fib lining up with a point of control, a naked point of control from volume, then I know, as Confluence, I know I've got volume traders looking at that level, and I've got fib traders looking at that level, which in turn likely means I've got Elliott Wave traders looking at that level. So therefore, the more people looking at that level to trade, the more likely it is going to have a reaction there. That's all Confluence means. So people take it out of context and start thinking it's a standalone thing. It's not.
And like I said, the very definition of a swing trade is it takes more than a day to play out, or you expect it to happen over the course of multiple days. That's it. It's the only difference.
Maestro, how do I stop letting outside noise override my conviction when my own setups are right. Detach.
Yep.
Depending on where it's coming from. For example, if the noise is coming from Twitter, turn Twitter off. You don't need it. No, nobody technically needs to be on Twitter. If you've got a good system and you're working, you don't need to be on Twitter. What benefit is that for you? Looking at someone else's setups, that's no benefit. If you've got a system that works, stop looking at other people's stuff. Stop looking at my stuff. How many times on Stream Cake on New York where you say, I really like that trade, and I go, yeah, I don't like that. And then you don't take it, and then it fucking plays out. Because exactly, it happens all the time. It happens all the time, and it's because that trade setup met Cake's criteria, but it didn't meet my trade criteria. So therefore, by me saying, I don't like that, that doesn't mean it's not a good trade. It just doesn't meet my criteria. But for Cake, it does. So don't let other people talk you out of trades if you've already got a good system. So Penguin is a swing trader, right? Yeah, he's... I don't want to speak for him, but Penguin did very well, and he's doing very well. He picked up things very quickly. Massive respect how quickly he picked things up. Then he went through his psychological turmoil of, you know, getting used to losses, getting used to wins, not letting things take over. And then his happy place, where he's performed the best, is high time frame, Elliott wave, swing trading. And all of a sudden, he's gone, right, that works for me. My stats show that works for me. I'm sticking to that. And all of a sudden, he's fucking topping leaderboards, and he's the noisiest cunt on Twitter. And credit to him. He's knowing what works.
But again, so he uses a 4-hour time frame for his trading biases, and they tend to play out over the course of multiple days. Therefore, he's a swing trader.
Yeah.
He found that if he was utilizing lower time frames and he was looking for day trades, then it was too many trades and he'd result in losses. He was only able to come to that conclusion because he has introspection in each journal, and he's following the principles that Spitty has laid out in the educational modules. And Hook is in Bangkok. Yeah.
He's a credit to him. He's made some money. He's enjoying it. Why not?
Absolutely.
And I think he's quickly realizing that money doesn't bring happiness. Right, do we have any other questions?
Love you, Eki. Fuck Enzo.
What is the first amount that can make you feel the taste of life?
Such a relative question.
Yeah, that's... If you're trading to get rich, you're probably going to fail. You're probably going to fail. I trade, right? I always use this example, and I know my guys fucking get so bored of me saying this. And I hate it, it's cliche because every fucking influencer out there says the same line, even though it's a complete lie from most of them. I came from nothing. I came from a council estate. In fact, there's a very well-known murderer came from the council estate that I was brought up on. That's the sort of rough background I came from. No money. I then made some money. But I've not changed the way I live. Everybody in this Discord calls me a tight cunt. Because I've not changed anything. My way of thinking is I don't use my money to improve my life. Yeah, okay, if my car breaks down, I can pay for it fixing. Things along those lines. That, to me, that's where you can say you've made it, where you don't panic when shit goes wrong and you get an unexpected bill. That's financial freedom. That, for me, is the true definition of financial freedom. I'm not worried anymore. But buying shit doesn't change anything. It doesn't. At first, you're like, oh yeah, look, new toy. Oh, look, I've got a new car. Oh, look, I've got a new big telly. Whatever. It doesn't change anything because you get very quickly acclimatized to it and bored of it.
Yeah, I think there was... can't remember what it was the comparison of, but the study of somebody who won the lottery, and within like a certain amount of time, small amount of time, they'd already returned to the original baseline of happiness. It's like, you can literally win the lottery and be no more happy than you were before. Like, obviously, yeah, everybody wants cool shit, everybody wants to have fun, and, you know, you deserve those things out of life because you only get one. So, you know, do whatever the fuck you want, have fun, spend all the money that you earn, by all means, that is your prerogative. But at the same time, like, you don't need it, really don't, to find happiness. I'm gonna give you some super dark philosophy here, and I got shouted at by the guys.
I remember this is going on YouTube.
Oh god. I got shouted at by everyone for posting this.
So don't use the K word.
Why don't you off yourself? What is the reason that stops you doing that? Okay? I love this bit of philosophy. It's so dark, but what is the reason that actually stops you jumping off a cliff or something? That reason right there that you've just come up with, that is the meaning of life. That is your meaning of life right there. Okay? Hold that dear and focus on just making sure that is as best as it possibly can be. Okay? That's the meaning of life. I love that because it's so brutal and so cutthroat, literally. But it's awesome.
I do like that. It's a good one. It just brings you back down to earth.
Yeah.
What is your turning point that makes you become a great trader? Honestly, it
doesn't exist.
it don't know. I think in your learning phase, and I know where this question is coming from, YRF. I know where this question is coming from because we all think this in the early days. We all think this. And this question gets asked if you watch any trader interview on a podcast that's actually real and not a fucking scammer, then everyone will ask this question because you're wanting that aha moment. But I'll be honest, there's no aha moment. There isn't. What you'll end up doing is, as long as you are repeating the boring shit that is trading is boring. If it's not boring, you're far too emotionally attached to it. You repeat the same shit day in, day out for a year, then you look at either your bank balance or your trading journal or wherever you've got your money, and you go, I've turned a profit this year. That's kind of your aha moment, but you never really see it that way. But that is your aha moment. That's your, oh, I've made it. If you can walk away after 12 months and you're in profit, and you can do that year in, year out, you automatically, by default, you are a great trader. By default, you are in the top 3% of traders in the world. It's just it's just simple as that.
Yeah, I fully agree in the fact that like there isn't like a single moment that you can like pinpoint and it's the same for everyone else. But during the phase in which you're learning about trading and the technical side, there's gonna be moments where you go, which is a little bit different, but it means that the understanding has just clicked. And now, like I said, you're able to look through the lens of that way of thinking, that concept or whatever, and you're able to view the market now in a new way that will start getting your brain ticking and thinking, right, okay, I can start making trade ideas out of this. This has got a probabilistic edge. I can start making money out of this thing. Okay, there will be moments where that happens, but it then all comes back down to the basics, like we said here, the boring stuff. Like, can you stick to 3 trades per day? Can you keep your risk sensible? Can you stick to a system? can you develop that system? There's stages throughout your journey as a trader, and yeah, trading should be boring. But if you don't want to be bored whilst trading, join our live streams because they're a fuckload of fun.
Yeah,
You get comedy.
I think that's the thing, because this job, I'm not saying as a mentor, but this job as a trader for you guys is a very boring, unfulfilling career. And no one, no guru will ever say that, because it's not sexy and it's not going to sell signals or mentorship or whatever. So therefore, this is why I love this community. If you listen to Cake and Ice streams every fucking New York session, we just howl. We are laughing all the time because it's nice to have that community feeling. Because this cop is boring. So having a good laugh while you're trading, it makes a massive difference. I fucking love it. Absolutely love it.
Not so, Jonathan. I think I'm in a good position to answer that. I still have my day job. I still work because I never wanted, and I'm a big proponent of this, because I never wanted trading to be the sole source of income that keeps the lights on. I don't want to trade with that sort of, I'm already trading from a negative place right there. You know what I mean? And that leads to emotional decisions. That leads to tilt. That leads to all these different things that is so much more possible because I need to trade to pay the bills. But when you've got a job, you've got that stability. So you've got to look at it a little bit different in the fact that you've got a good foundation, a good base in which to operate from. Okay. And you say that you find it difficult juggling the charts, your job, etc., etc. Very, very simple. Allocate time segments of the day in which you can do one or the other. For me right now, I pretty much don't really trade London anymore. I just do my day job, and then I'll just spend the afternoon trading New York with the guys on stream. It's kind of what I do now. And I've just separated the day out, okay? So if you can manage your time better and allow yourself a period of time in which you are able to focus on trading solely, that's what I would recommend. Find 90 minutes of your day in which you can trade. If you have to move some things around to trade the best sessions like New York, then try and do that. But if you can't do that, then maybe trade London. We've got plenty of strategies for London. Maybe even consider Asia. I wouldn't recommend Asia, but we have got some strategies that are particularly good in Asia from what I've seen, and that would lead you on to gold. Gold is great Asia sessions. So there is ways to get around this kind of stuff. Just, if you're having some troubles, speak up like now, and we can try and help you out. You like Asia for crypto? You're a fucking weirdo.
To be fair, though, crypto does move. Bitcoin does move more in Asia now. By the time I go to the gym at 5 a.m, it's like, oh, look, it's moved. And then I get back from the gym and it's like, oh, no, it's not moving for the rest of the day.
Yeah.
But I think to add to that, Jonathan, as well, what Cake has just said then, you've got to ensure that, excuse me, everything lines up. So if you only have an hour a day to trade, but you don't really want to be looking at swing trading, you don't want to be looking at anything that's high time frame, you need to ensure that your strategy can work within that specific period of time. So if you can be free, as an example, between New York Open until initial balance closes, then you need to ensure that your strategies line up with low time frame trading and that works within that. And when you're doing your back testing, you need to ensure that you're back testing only within that time period and you're not using a larger section of data. You've got to think about this. You could come up with a strategy that has a 60% hit rate. And you think, it's fucking ace is this. But then when you actually break it down, you realise that those winners that make up that 60% all come in Asia. And you're trying to trade New York. So you need to ensure that everything you do lines up with your specific requirements. Burnsy, manage your expectations. Relate your trading profits to how long it takes you to earn that amount doing your day job. Love that.
Yep.
We talk about that so much. Right, have we missed anything else? Scrolling up. How do I get bigger chest? Do more than 4 reps. That's an easy answer. And also make sure you train your legs. Chest twice a week is more than enough if you're doing high volume. If you're trying to lift heavy and low volume, you are not going to get growth.
Alright, this isn't about your fucking sick muscle fetishes. Can we just stick to the topic, please?
That's a question in chat. I'm answering it.
My sleep schedule is fucked, so I'm awake during Asia. You gotta fix that, bro. You gotta fix your sleep. It's the most important thing that you will do all day. Fact.
Health. It all comes down to health.
And if you want to fix your sleep, don't prioritize a morning wake up. Prioritize a bedtime, okay? Set yourself a bedtime and fucking stick to it. Because if you go to bed early enough, you won't need an alarm to wake up early, okay? I sleep 8 hours though, so go to bed at 9. I go to bed at 9/10. Every night.
Every night.
Every night.
And they take the piss out of us for it.
I sometimes get 10 hours sleep because I go to bed early.
Bed by 9. Wake by 4:45.
Yeah, you're a little extreme.
I just like mornings. I'm more functional on morning than I am on an evening.
Yeah, because once you do that, like your mornings, your evenings could be super chill.
Yep. As soon as I've had my tea, replied to a few comments.
Yeah.
Switch
Also,
off.
one thing I also think is really cool that I like to bring up sometimes to the guys is, imagine you've got a dopamine gauge, right? And this is your dopamine over time, okay? What happens when you wake up in the morning, you check your phone, you go on Instagram, X, whatever, and you go, doop, big dopamine spike, right? And then you go to your desk and you try to do your journaling, you try to do some analysis, you try to do education, and it's nowhere near as stimulating. So over time, your dopamine levels are like doing this kind of thing, right? And it's just so much more difficult to do harder tasks because you're operating in this level of deficiency, okay? So when you do really stimulating things at the beginning of your day, and you're doing like, you know, caffeine super early and things like that, and you're not allowing your cortisol levels to come down, shit like that. There's all kinds of things you can do. But what that is doing is it's making hard tasks even harder. So the best way to do it is to stay away from television, YouTube, X, your phone, and just let that dopamine sort of like simmer like this, and harder tasks become easier throughout the day. And then when you reach your evening, do whatever the fuck you want. And then you go to bed and you wake up the next day. And that is going to help you massively with getting shit done. It helps me massively. Okay? Yeah, don't wake up, have a wank, watch porn, have a pre-workout, and scroll TikTok. Because then when you go to do some work, it's going to be like, oh, fuck.
Right. Have we got any more questions? If not, we will wrap this up. Has it been beneficial? Have you learned something out of this? Not really for the members, but for the other guys. If the members have learned something out of this, then go watch the fucking psychology modules. Please.
This is so important. Okay? If you're gonna leave with anything today, just do this. If you break that rule, then you're really not helping your progress.
Definitely massive learnings. I'm going to delete Twitter.
Good
You got to see what distracts you. Same with that. You know, if Twitter does distract you, delete it, remove it. You don't need it.
Yeah.
What benefit from a crypto or trading point of view does Twitter give you?
Except for if you don't have your own fucking Forex factory and you're looking on Twitter for someone to tell you what the news just was. Which, let's be honest, by the time the news has come out, it's too late anyway. Don't benefit you. Love the dopamine pancake. I like that.
This is I'll quickly give you it if I can find it. What was his fucking name? Here he is. Right, this is where I learned that concept. It's a cool video. This guy's always talking about this kind of shit, about hard work and that. It's called dopamine loading. Another cool way to sort of utilize that principle is something information diet. So if you filling your head full of Twitter and fucking crypto guys and all this dog shit on YouTube and fucking, I don't know, Nelk boys and, you know, shit that you find on YouTube. If you're feeding your brain shit, that's what you're gonna get out. So focus on a nice and strong information diet, one that nourishes you and your brain, okay? You should focus on things that give you energy, not take it away, okay? And I know some things are boring, but if you want to do the fun stuff, you still want to watch movies, you still want to watch telly, you still want to play Xbox, just do it at 6 PM when the day ends. Just do it at the end of in the evening. Just do it for a few hours. And then you'll get that big spike in dopamine, you'll really enjoy it, and you'll have looked forward to it all day. You would have got all your work done, you would have been super accomplished that day. You go to bed, you wake up, and you go again. And buy a fucking Kindle. Buy a Kindle. Because I have a Kindle under my pillow, and I go to bed every night and I read a book. It puts me a kick.
Audio books if you're illiterate like me.
I read my Kindle every single night and it knocks me out within a page. It's such a good way to fall asleep. And do not read like non-fiction, read stories, read like sci-fi and fucking adventure and shit like that. What am I reading right now? I'm reading a book about pirates, about like wreck divers looking for a pirate wreck in the Bahamas. Really cool. I love sci-fi stuff though. Definitely recommend reading anything from Andy Weir, who is the guy who wrote The Martian. I'm sure you've seen the film. Oh, fucking hell. I told you so.
Fozdog's got a question there, Kirk.
Not even today, you reckon? Good for repeat efforts a day while learning as well, trying to work out how to best manage that. Yeah, so look over the course of your week, see where you can find like creative time or where you can find like manager time. So there's two ways of defining like work slots from what I've personally implemented. So like creative time can be like you're learning stuff, you're applying things, you're coming up with new ideas, you know, you're utilizing that brain center a little bit more of like trying out charting, you know, doing that kind of thing. Maybe do some trading in that time as well. And then maybe block out time for like management side where you're just doing task after task after task. You're doing like calls, you're doing to-do lists, you're doing shit like that. And just try and segment your days. Like I go through all of that in my cookbook. I've got a whole section, all that kind of thing, how you can design your days with time slots and allocations like that. But 90-minute segments of just like, if I could find that for trading, just for day trading, try and get that around New York time, and you know, you'll make a lot of progress really quickly.
It's more about it's knowing how, and I say this at the start of the course, and I've said this for the last 4 fucking years or 5 years. When you go to school, you don't learn education, right? The whole system's crap, and we all know that, no matter what country you're in. But what you do learn, and what nobody picks up on, is you're learning how you learn best. And once you understand how you learn, then you can start working out schedules to how to fit something in. It's all about how do you learn. Do you need to repeat something? Do you have to do something again and again and again? Do you have to write something down? Do you watch a video and that information just stays in your head forever? You know, work out how you learn, and then build a schedule around that.
Yeah.
Because we're not all the same. That's why some people might take a few months to learn, some people might take a few years to learn. And either option is right. It's just whatever works for you.
And if you want the quick way to learn stuff, especially in trading, utilize the teaching element. So one of the reasons I first ever got into teaching people how to trade and how mentoring, I've been doing it for quite a while, to be fair, pretty much as long as I've been trading, because I recognized if I could teach somebody about these concepts, I would inherently understand them better. And if I inherently understand them better, I will be a better trader. Okay? And that's where the community element comes in. Bring in your own journals to the group, telling people and explaining your ideas. Also, if somebody has a question about that kind of thing, engage with those people. Okay, so when I'm having one-to-ones with people, I'm telling them to engage with other people in the community, because you can get that element of teaching. And once you are able to present an idea and actually tell somebody how it works, you don't need to memorize it anymore. Like, you don't need to memorize anything if you understand it fundamentally. Okay? So
it becomes autonomous.
Exactly. So that's why engaging with other people in a community is so powerful, because it will make you better.
Right. It's an hour and a half, is that? Let's wrap this up.
Righto.
Right. Hopefully you all find benefit out of that. And we will catch you next time.
Monday morning, we'll be doing Spitty's normal morning calls, where he goes through his plans on Bitcoin, analyzes the weekend, and goes through what's happening for the week. I'll do the exact same for TradeFi, a little bit of crypto as well. Yeah, so we've got calls on Monday morning, then we do New York sessions Tuesday, Wednesday, Thursday, with some morning sessions splattered around here and there. And then on the Friday, we do sessions like this, where they're either doing more educational style, more conversational, or we get like the lieutenants up here. So like Kane did an Elliott Wave stream a couple of weeks ago. So it's kind of like our, as ad hoc session, shall we say. But the core is going to be that Tuesday, Wednesday, Thursday with New York sessions. So if you really want to get involved with us, come along to those sessions and have some fun and make some money together.
Got a little burp in there. I'm happy with that. Right. Enjoy the rest of your Friday and enjoy your weekend. And if you are going trick-or-treating, eat lots of sweets. See you guys.
Bye.